Happy Tuesday, everybody. Today is January 20th, 2026, and this is your Monday market update, even though the week this week begins on Tuesday for us, with markets closed yesterday in observance of Martin Luther King holiday. With the holiday, this is one of those weeks where investors hit the ground running. There's no easing in. Data, earnings, and headlines all arrive at once. That makes market perspective even more important, and it ties directly into the Friday planning video series that we've been doing. Planning ahead, staying disciplined, and not letting short-term noise derail our long-term strategy. Let's get back to the markets. Here's how last week unfolded. Markets opened last week wrestling with headlines out of Washington. Early concerns about Federal Reserve independence resurfaced following the Justice Department's investigation into Fed Chair Jerome Powell, alongside renewed policy proposals from President Trump, including discussion of a cap on credit card interest rates. Financial stocks bore the brunt of that pressure early, but the broader market showed resilience. Large cap tech and AI-related names stabilized sentiment, allowing stocks to recover from early losses as investors focused back on earnings and fundamentals rather than just headline risk. The Dow was up less than 1/4%, S&P up less than 1/4%, and the Nasdaq was up just over 1/4%. Tuesday brought a noticeable shift in tone. Bank stocks slid sharply despite generally solid earnings, with JP Morgan leading the decline as investors focused on margins and the potential implications of regulatory and political pressure. Inflation data released that morning showed continued cooling, which did help limit the downside, but it wasn't enough to offset weakness across financials and payment companies. So the Dow was down about 0.75%, S&P down just about 1/4%, and the Nasdaq was down just 0.1%. Midweek volatility picked up further. On Wednesday, technology stocks weighed on the market following reports that Chinese authorities were restricting certain U.S. semiconductor products, reigniting concerns around that U.S.-China tech tensions. At the same time, bank earnings were viewed as good but not great for a market trading near record highs. Geopolitical headlines added another layer of uncertainty, keeping pressure on risk assets. The Dow was down about 0.1%, S&P down over 0.5%, and the Nasdaq down 1%. Thursday marked a clear change in momentum. Strong earnings from Taiwan Semiconductor, Goldman Sachs, and Morgan Stanley all helped to re-anchor the markets back to fundamentals. Taiwan Semi's commentary around increased capital spending did reinforce confidence in the durability of the AI investment cycle, which, while better than feared bank results, did ease some of the stress that had built earlier in the week. Stocks rebounded broadly, even as gains moderated into the close. The Dow was up almost 2/3%, the S&P up 1/4%, and the Nasdaq was up about 1/4%. Friday was quieter but telling. Markets traded in a narrow range as investors weighed another round of comments from President Trump regarding the future of the Fed and broader economic policy. While those remarks sparked brief intraday swings, there was no panic selling. Stocks finished little changed, closing out the week that felt volatile, but ultimately was very controlled. The Dow was down less than 1/4%, S&P down less than 1/10%, and the Nasdaq also down less than 1/10%. For the full week last week, the tone was more dramatic than the numbers. The Dow down roughly 1/3%, S&P down just under 0.5%, and the Nasdaq was down roughly 0.75%. Key theme from last week was resilience. Despite unsettling policy headlines, markets continued to hold up because many of those proposed actions face meaningful hurdles. Finally, we got the ideas people are thinking about this. And because economic data remains largely Goldilocks, steady growth with easing inflation pressures. That balance has allowed investors to look past the noise, at least for now. Turning to this week ahead, and then keeping in mind that we are starting again today on Tuesday. Markets reopened this morning following the MLK holiday, and attention will turn quickly to several key events. Tomorrow, on Wednesday, President Trump is scheduled to speak at the World Economic Forum in Davos, with housing affordability expected to be a central theme. Discussion is likely to include limiting large institutional investors from purchasing single-family homes, and directing Fannie Mae and Freddie Mac to purchase mortgage bonds to help lower borrowing costs. All this news from last week. Whether or not those ideas translate into policy, the rhetoric alone could influence sentiment across housing, financials, and rate-sensitive sectors. Thursday will bring about the most important data points of the week. That's the delayed PCE, that's the personal consumption expenditures inflation report for October and November as the Fed's preferred inflation gauge. This release comes just ahead of next week's FOMC, easy for you to say, meeting, and will help shape expectations around the timing and pace of future rate cuts. We'll also get the weekly jobless claims that are being watched very carefully. Adding another layer to the Fed narrative, the U.S. Supreme Court will hear oral arguments related to Fed Governor Lisa Cook and the administration's efforts to try to remove her. While not an immediate market driver, it does reinforce the ongoing backdrop of Fed independence concerns. Earnings will also be front and center. Netflix and Intel headline the technology calendar, while reports from GE Aerospace, Johnson & Johnson, Procter & Gamble, and United Airlines will provide insight into consumer demand, travel trends, and capital spending. This is where the Friday planning video series ties in. We've been talking about planning ahead, avoiding recency bias, staying disciplined through uncertainty. Weeks like this are the real world test. Headlines will shift, markets will react, but long-term success still comes from preparation, diversification, and sticking to a thoughtful plan, not reacting to every turn in the road. Bottom line, it's a shortened week, but an important one. Data and earnings will matter far more than the volume of headlines. Stay focused on the plan, stay grounded in perspective, and remember, volatility is often the price of long-term progress. Have a great week.